All right, folks, 12 seconds. Here we go. We need 2.9. We really need 2.9. That's what the market wants on the headline. If it comes in a little bit higher, I don't know what it's going to be like. A little bit lower would be awesome, but 2.9 is what we need. All right, we should be getting it really soon. We should be getting it very soon. 2.9. Did we get 2.9? Let me refresh this. 2.8. Wow, we got 2.8. Oh my gosh, we got 2.8. We got 2.8. Do you guys see that? Do you guys see that? Hold on, where is it? Where is it? Where is it? We got 2.8. 2.8. There it is. Inflation rate 2.8%. 2.8. Oh, thank the heavens above. Thank God. Oh my goodness. We got 2.8. Markets are Nvidia 4%, S&P 2%, baby. Wow. What a ripper. Hood's got to be above 40. Hood not above 40, but it's up 6%. That's nice. Bitcoin 84.2. Look at that. $1,400 candle. It's a nice candle. Palantir 83. Amazon's up 2%. Meta's up 2%. Tesla up 6%. That's very nice to see. Tesla hit a low of 215 a couple days ago. Now it's at 243. Rocket Lab 11%. Rocket Lab also had some deal this morning, which is what's helping them. So they're up 11% right now. Redwire's up 4%. Royal Caribbean's up 1%. Carnival Cruise is up 2%. United Airlines is 2%. Okay, before we keep going, first poll I'm going to do in the chat, because you know I got to ask this question, is do you think that you can trust this report to have a sustained bounce? Archer's up 6%. Yeah, all right. So market likes it. We needed 2.8. We needed 2.8. Or we needed 2.9. We got 2.8. Do you trust the CPI green? Do you trust it? Do you trust it? Do you trust it? Okay, let's get some live reaction to this real quick, and then we'll get deeper into the numbers on what we've got with CPI. 2.8 on the headline. What was the core? Let me see the core real quick. The core was 3.1. The market thought it would be 3.2. Wow, so we went lower on the core. And month over month, market thought 0.3. We came in at 0.2. We came in lower on every metric. That's a good report, bro. That's not a horrible report.
That's another all-time high going back to 1913. If you look at core, that was started in 1957. It comes in at 325.47. And guess what? Another new all-time forever high. Go use that inflation tool on the Bureau of Labor Statistics and the website, and what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time. Unlike today, where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
Okay, Rick, thank you for that. Steve.
Okay, we'll get some more coverage on that in a second. Here is the actual report right here on CPI. So 2.8%. Again, that was what we got on the headline, which was very, very important. The index for shelter rose 0.3%, accounting for nearly half of all items increase. Again, shelter continues to be the freaking thing that gets the market upset. It's this shelter thing. And Trueflation, a lot of these other websites that are tracking inflation, anyone who's been like looking at shelter in depth thinks that that's lagging, but the Fed says it's 50% of the increase. Shelter was offset by a 4% decrease in the index for airline fares and a 1% decrease in the index for gasoline. Okay, so this isn't that bullish. Gasoline one is bullish. The airline fares, is kind of weird. I was making a joke that when I was flying to where I'm at right now, I had the whole row free. And I was happy that I had the whole row free, but immediately I thought, wait a second, is demand going down for airlines? A 4% decrease in the index for airline fares means that airlines are decreasing their costs to get more consumers to come in, which means consumers might not be as easily getting in, right? That's, I mean, this Delta's guidance showed a 50% decline in Q1 guidance. Now we're seeing a 4% decrease. in freaking CPI because of airline fares. That to me means people might not be traveling that much. The index for all items, less food and energy, rose 0.2%, following a 0.4% increase. The all items index was up 2.8%, excluding food and energy. Medical care, used cars, and trucks were up. Household furnishings were up. Recreation was up. Apparel was up. Personal care was up. Airline fares and new vehicles were the indices that decreased. Were the ones that decreased. Okay, so airline fares and gas went down. Energy, shelter, and pretty much everything else went up. Southwest is up 1%. JetBlue is up 2%. Where is Delta? They were down 20% yesterday. They are up 2%. Not really a recovery, but at least it's something. Bitcoin just below 84,000. Robinhood below $39. It's up 6.4%. Meta's back at 623. Tesla's up 6%, 244. Block's up 2%. You know what's also going to be really important today is who sells into this strength. Because you finally got a green day after what seems like 3 weeks of red. I think there's going to be some people that take advantage of this and say, all right, I'm out of this market. I'll be back later. I'm going to sell into this. Maybe some people buy into this, but we're going to see. NVIDIA's up 4%, and then Grab is up 2.78% as well. By the way, that company Grab's trying to buy GoTo, their biggest competitor in Indonesia. They had their earnings today. And in the call, they said that they would be open to an acquisition with Grab. So that could be some piece of news that the market runs on as well. SMCI right here is up 7%. Yeah, look at that. 43.60. That one's really moving as well. What did you guys say on the poll? 59% of you say you trust the CPI green. All right. Once the market opens, we're going to see if this green actually can be trusted.
Steve Leisman is right here looking at these numbers.
Yeah, there was a concern we would come in on the high side.
By the way, did anyone see Steve Leisman, who is the senior economics reporter for CNBC yesterday, say Trump is insane live on television yesterday? He went on like a 3-minute rant on why Trump's tariff policies are insane. So he's not happy with Trump and tariffs, and he took advantage of that yesterday to let everybody know.
Everybody said they were looking for upside surprise, so it's really good to come in below here. You got some help from food, Andrew, up just 0.2. You got a pop in the, I have the egg category, but not eggs themselves on the top line data. Meat, poultry, fish, and eggs up 1.6% after 1.9 the month before. Dairy products were down. I don't want to go through too exhaustively. Energy was well behaved. You got a decline in airline fares down 4%. We don't know if that's a demand thing or that's just an energy thing being passed through. And then, of course, the owner's equivalent rent has been much better behaved right now. And where we are is we're going to see some impact of the tariffs. Nobody knows how much. I can't tease it out of here right now. I'd look for core goods used cars would be one place to look for it. That's one place where people are concerned. You might see that first initial round. We're going to see some impact in the months ahead. Nobody knows how much. It's very difficult to game it out right now. Right now, the street is looking.
The 10-year is not. Oh my God, the 10-year spiking. This is the opposite of what Trump. Why is the 10-year spike? Hold on. We beat on every single metric. Why is the 10-year up? Who has a theory on that? Why is this is not what Trump wants to see? You know what? I think Trump has a picture of the 10-year or a live ticker of the 10-year on his desk in the Oval Office. And every time he sees it spike, he puts out another tweet about tariffs to create more volatility. Why is this going up? Why are people not buying bonds right here? Why are they selling off bonds off of a miss on inflation on every metric, which is good? Like if just does no one trust it, or this is not what we're supposed to be seeing? We're supposed to be seeing the opposite.
Looking for rate cuts from the Federal Reserve. These kind of numbers get the Fed closer to where it could be, but you would think it would still be a little bit too hot for them to say, okay, I'm going to cut next week.
Right.
But in this trajectory, you can say, we could maybe think about one if you don't get a big.
Oh, that's true. I forgot. Yeah, people might be selling bonds to buy stocks. Yeah, that's fair. That's a fair point. That's kind of obvious. Yeah. This is why it's such a tricky situation, dude. If people sell bonds to buy stocks, that pushes bond yields higher. That's great for all of us, but it's not great for Trump's agenda. This is why it's tricky, dude. It's really tricky to navigate what's going on in this market right now. And we're going to have to see how Trump reacts to this.
And lasting. In other words, this idea of the pass-through, it's the big and lasting tariff impact that I think would most likely stay the Fed's hand.
But you still want to see the CPI numbers tomorrow. PPI numbers tomorrow.
PPI is where you would see it first. But again, we talked about this for a long time. There's pass-through. And pass-through, you could reduce margin. That's bad for investors in stocks if there's a margin reduction. but it's better for consumers if they eat it. Remember that chart I showed that you were a little bit perplexed about, all these stations along the way where tariff impact can be reduced. There are 4 or 5 places where you could absorb it. We'll see how much goes along. Has to do with how much competition we have in the business.
All right, so that's what we got on CPI. For those that are just joining, CPI comes in 2.8 versus 2.9%. Core comes in at 3.1 versus 3.2. The majority of you in the poll said that you trust this green. I want to say yes, but I'm still a little skeptical of this green. I think a lot of people are going to take the opportunity to potentially sell into it because they've been waiting. I mean, if you don't trust the market and you finally see a green day and you break even, I think some people sell into that. Now, granted, we're going to have to see what headlines come out today. SoFi right here up 5% as well. But it just shows you how quick the market can turn, right? Like, did SoFi deserve to be $10.65 2 days ago? Probably not. And now that it's back at $11.87, even if it might not last for the next few hours, like, it can turn on a dime, right? It's easy for this market to immediately U-turn. It needs a catalyst. But then the question is the catalyst enough to get people to hold and buy into this rally? I mean, Reddit was up 15% yesterday. It's up 6% right now after falling basically 50%. But is there enough momentum? Is there enough momentum? TLT, that safety trade everyone loves, that one's tanking right now. Not tanking, but it's down 0.5%. It was down 1% yesterday because bond yields are up. Nvidia is up 4%. This is going to be a little weird, bro. Trump, I think I'm getting more and more convinced. Oh, so it's like, so we've been talking about this theory a lot on the show, right? That Trump wants the market to tank in order to get yields to come down. We got another form of confirmation from this yesterday, dude. I know some people don't love this theory, but I can't keep ignoring some of the smartest investors of our time that are basically co-signing this theory. Here's what Ron Barron said yesterday. Listen to what he says towards the end of this clip. It's a minute long about how he's thinking about what the Trump administration is doing.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When stocks prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
And, well, everything. Yeah. I think it might even be intentional to try to slow down the economy, get rid of.
Look at what he just said. I think it might be intentional to slow down the economy and get interest rates down. I mean, this is one of the greatest investors of all time, in my opinion. Went super long Tesla, SpaceX when no one believed in it. He's sitting on, I think, $12-15 billion of equity within those two companies. And his argument is, yeah, I think Trump's creating volatility because he cares more about yields versus the stock market.
Stock market down to get to a different place for the economy. And
well, everything. Yeah. I think it might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents. If you're running for election, but you do it now, get it out of the way, and then a year and a half from now, then things will look better.
So, I mean, look, I don't think this means that Trump is the smartest guy in the world for what he's doing. I think this theory is very dangerous. I think he's playing with fire. But more and more, we are seeing people that are in very high levels within the investment community basically agreeing that this is what they think the administration is doing. In fact, not only has Trump said this many times, but his press secretary yesterday, when asked about why the S&P 500 has lost all of its gains since the election, basically avoided the question and said, we're committed to tariffs more than the stock market.
Karen. Thanks, Caroline. Just back on the markets, you said that what we're seeing this week right now on Wall Street is a snapshot of a moment in time. But does the president think he bears any responsibility for the turmoil in the stock market this week?
Look, the president is unwavering in his commitment to restore American manufacturing and global.
Not to the stock market, right? And like the press secretary is just an echo of the president. So the president told her when asked about the market, talk about tariffs.
Dominance, and I think he doubled down on that this morning with his new statement and the tariffs that will be implemented tomorrow on steel and aluminum.
And he has said recently he's not looking at the market. He said you can't really watch the stock market, but all of the gains since election day have been erased in the S&P 500. At what point, how far do stocks have to fall before the president considers it a factor and changes course?
Again, as I just said, the president will look out for Wall Street and for Main Street, just like he did in his first term. And people on Wall Street and Main Street should bet on this president. He's doing what's right. Karen.
So, I mean, look, there you go. So the only reason I bring this up is because this is really good news. The CPI coming in lower than expected is great. It gets the Fed a little bit closer to cutting rates. The problem is the market has been thinking the Fed would cut rates because of fears of a recession, not because of fears of inflation coming down, because inflation is not meaningfully coming down. If you look at the CME Fed probability watch tools, we are at 41%. I think that's a little bit lower, if I'm not wrong, than yesterday. So rate reduction chances have decreased. In June, we are at 54%. So it's looking very likely in June that we get that cut. In March, we are still at 3%. So March 19th, which is 7 days from now, I don't think we're going to get the cut. But May, hopefully, is the next time for us to get a chance to get that cut. You guys are having great jokes in the chat about the hair. I got to make a compilation of these jokes. Style says, I'm going to get a mid $100 gift card to Great Clips. Someone said, I look like a guy the DEA would be busting. You guys, these are great. This is why I wear a hat every morning. I know my hair is too freaking distracting, but today I just didn't care, dude. I'm too sick to deal with all that. NVIDIA right here up 4%. SMCI up 6.5. PayPal's up 1.2. Robinhood's up 4.8. I want to trust this green, bro. I really want to trust this green. I just don't trust it yet. Especially with this 10-year spiking, I don't know how the administration is going to think of this, because now those beloved mortgage rates are probably going to go up as well. And that's not what Trump wants. Who would have thought, bro? Who would have thought? Maybe some of you guys thought, but I did not think Trump's term or first term or first, whatever, 100 days of his first term would be rooted in this idea of like, screw the markets. Let's just focus on yields. Even though that's kind of what he was telling us, but I guess I didn't take him seriously, or I didn't read between the lines, or no one took him as seriously. And this is how it's playing out. There was a good chart that we were seeing on the first couple of months of his term in the stock market, and you can see Trump versus Trump 1.0 versus Obama versus, I'll see if I can find the chart, but pretty much every chart is going up and to the right, and then Trump is just like going to the bottom. The first 60 days of the administration, which is what we're seeing for Trump 2.0. Was that as in his policy pre-election? Yeah, I mean, to an extent, when he was talking about tariffs, which I guess would, but I don't think anyone thought that this was the plan, that they were going to focus on rates more than stocks. Everyone thought they were going to focus on stocks and like just growth. But that's not exactly what's happening. As a result of what Trump's been doing, Coinbase is now going into India. That was some good news yesterday. So that's big for Coinbase, big for India, because there's a massive crypto appetite in India. Dude, I met a lot of people in India that care about crypto, just like friends of friends when I was there back in October. And when I would ask them about investing, they didn't talk about stocks. They talked about crypto more than stocks. So crypto is definitely a big thing in India. And I think Coinbase is going to have some success there. Look at the Mag 7 forward PE. It is the lowest level since 2017. Think about all the earnings growth since 2017 on the Mag 7. This is what Trump has been able to give us. The lowest Mag 7 forward PE that we've seen versus the S&P 493 since 2017. I mean, we have not got these levels in over 7 years at this point. So this type of volatility is being, I guess, welcomed by some people, but obviously other people hate it. And this is kind of the nature of where we're at right now in the current state of the markets. And CPI is good, but CPI is going to be one of those things that the administration has to tackle from a perspective of if they really want to see all this good news be good news versus bad news.